Welcome everyone to Vested Interest. This is Shane back for a Stock Pick of the Day video. It is Wednesday, January 29th, quickly wrapping up the first month of 2025 here. We're going to take a look at one out of the real estate sector. This is a REIT, Omega Healthcare Investors. Before we get too far in the video, if you could do me a big favor, it doesn't cost you but a couple seconds of your time, and it really helps me out. Hit the thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever I put out any new content. I do this Stock Pick of the Day video series Monday through Thursday whenever the market's open. We take a look at a company stock that's pulled back on the day, run it through the screener, and see if it makes it onto my watch list. And there's the thanks button down below for anyone who wants to buy me a cup of tea. And really appreciate, and a special thank you to all the subscribers and the viewers out there. You guys are awesome. The channel continues to grow because of people like you. And share the videos with anyone that's an investor you might know who might get value out of them as well. Now, this is the Vested Interest Stock Screener. You can pause this, read through this criteria. We're going to take a look at this in the video. This is the criteria. We'll run it through. Now, you'll see here there's a couple different. It must meet 5 of 8 to make it on my watch list for most stocks, except for those in the financial sector. So stocks in the financial sector, 6 of 9, because we throw in price to book. We won't be looking at price to book, and price to book can be used for any company. Just don't blindly use one for fair value like for banks. All right, back to Omega Healthcare. Check them out on their homepage, www.omegahealthcare.com. That's www.omegahealthcare.com. That is their homepage where I pull this information from. Omega Healthcare Investors Incorporated is a real estate investment trust, a REIT, that provides financing and capital to the long-term healthcare industry with a particular focus on skilled nursing facility and assisted living facility operators across the United States and the United Kingdom. Through our triple net lease structure, we provide customized financing to a diverse group of healthcare providers. So that's their niche, healthcare providers. Triple net lease means they are buying the properties, and the leasee, whoever's leasing the property, they are responsible for any of the repairs, the bills, the upkeep. So that kind of keeps them out of that portion of the business and puts it onto whoever's doing the leasing of the structure. You can see here their overall portfolio, 81 operators, so 81 different tenants they have, 962 properties across the U.S. and the U.K. If you were to go to their webpage, there is a map, interactive map of just the United States, where you can click on each state and see how many are from each state. 90,044 beds total, 42 states they're operating in, one foreign country. What we saw was that's over in Europe, and a 10.7 billion total estimated or total real estate investments. All right, the reason we are taking a look at them, down 3.88% on the day. We are talking about Omega Healthcare Investors, ticker OHI, closed out the day at $36.17. Big drop for the day. Not as big as some of the ones we've seen in the previous videos this week, but still 3.88% on the day is a big drop. 52-week range, $27.53 for the low, $44.42 for the high. It is still closer to its 52-week high than its 52-week low, and it is not within 15% of a 52-week low. Market cap of $10.033 billion, a beta of 0.98, so they are just slightly, ever so slightly less volatile than the overall market, one being the market. Price to earnings ratio, PE ratio, seems high at $26.60, but for REITs, you should be looking at funds from operation. EPS, earnings per share, is $1.36 per share. Earnings date is coming up February 5th. Forward dividend is $2.68. They are a quarterly payer. I am long this company. I do have a position here in this. We'll see that at the end. Very high starting dividend yield at 7.12%. Ex-dividend date, November 4th. We're past that. It paid out on the 15th. So if you were to buy them now, you would be in line for the next dividend, but you'll have to wait. They pay out, I believe, next month. Now, 1-year target, or maybe it's the month after, 1-year target estimate of $42.33 next month, I believe. 1-year target estimate of $42.33, at least according to Yahoo Finance. I'm not affiliated with Yahoo Finance, just one of the places I go to for information. Jumping over to the right, I like to look at dividend yield theory to see if this one is potentially undervalued. 5-year dividend yield average at 8.38%. We compare that to their current 7.12%, or over here where it says forward annual 7.12%. Since this is lower than their 5-year average, that actually speaks to overvaluation. At least according to the dividend yield theory, this one is potentially overvalued. Payout ratio, I like under 75% here. They're at 197.06, so you want to keep an eye on that, though REITs more often than not are over their payout ratio, or over what is considered a high payout ratio. They have to pay out at least 90% to shareholders to maintain some of the tax advantages for REITs, but this is elevated, right? They are doing something. They've either got a bunch of cash on hand, they've made some money from investments, they're issuing stock, which a lot of REITs do. They're doing something because they don't have enough free cash flow to cover the dividend, at least according to the payout ratio. Dropping down, we're going to take a look at free cash flow. I like growing free cash flow over time. Typically, if a company has growing free cash flow, they have growing dividends to match. Looking at December 2021, $722 million in free cash flow. A drop down in December 2022 to $625 million. Further drop December in 2023 down to $617 million. Trailing 12 months is $685 million. They did repurchase some shares back in 2022. Looks like they pulled out $142 million and 267,000 out of the market. But if they've been issuing shares since, that doesn't really help. So we'd have to look at the issuance of shares as well. Jumping over to stockanalysis.com, this is another source I go to for information. Again, not affiliated, just another source. I do recommend more than one source so you can make sure the information you are getting is accurate and up to date. 2, if not 3 sources, any ones that you want. You don't have to use the ones that I'm looking at. These are just 2 that I like. They have 10 analysts that have taken a look at this over at stockanalysis.com. They call it a consensus buy. They have a low estimate of $30. If it drops down to their lowest estimate, that would represent a 17.06% decrease from where it currently sits. Average estimate of $39.20 would represent an 8.38% increase. And if it happened to hit their high, $45, that would represent a 24.41% increase. And that's pretty close to what we saw with Yahoo Finance on the previous page. Now, I like to look at statistics. I like to look at return on equity and return on invested capital to see how well the company is reinvesting back into itself. And I like 10% or better for these metrics. Looks like it's not looking good. Return on equity at 8.67% is under the 10% I like. Return on invested capital, same thing, 4.03%. Earnings per share growth is not listed. I like expectations of 5% or better over the next 5 years. So nothing there and nothing listed for revenue growth. Don't like that they don't have the numbers. I hate whenever they do that, but it happens. Omega Healthcare Investors, again, I am long. I have 299.44829 shares. Even with the drop today, I am up at 25.09%, right? My cost basis is 28.91, so I would want much more of a pullback before I'd be interested in this one. It has to at least be within 15% of a 52-week low. I'm happy to just let my position sit and ride. Quarterly payer, again, payout ratio very elevated, 196.46%. We want to keep an eye on this. Dividend growth, that's the one thing I don't like about this one either. No dividend growth. High dividend yield, but no growth. Buyback yield is negative, so they did not buy the shares back whenever they did a couple years back at an opportune time, negative 6.34. Shareholder yield is positive at 1.07. They do pay out on the February, May, August, November. So yeah, it would be next month or next dividend. February, May, August, November, which is off of the timeline for most companies. Going back to April 2022 here, you can see 67 cents, and it's held steady there ever since, right? And I think it was steady before that even. So they are not raising the dividend. I wish they would. Very high starting dividend yield, but even a slow growth would be nice on this one. All right, let's check the screener, and there is not much green at all here, right? Understand the business. That's where we started. It's a REIT. They are focused around long-term healthcare. Growing free cash flow, no. Growing dividend, no. Dividend payout ratio is not under 75%. It's actually elevated. We want to keep an eye on that. Dividend yield theory says it's potentially overvalued. It is not within 15% of a 52-week low. Return on invested capital nor return on equity, neither one of them were over 10%. Earnings per share growth was not listed, so it only gets 1. This would not make it onto my watch list, but if you noticed, my cost basis on this one is so low. I bought it so long ago. I locked in almost a 10% yield at the time I bought it, which was part of the reason, and the metrics looked a lot better back then. But I may want to get into this one and actually look and see what's going on here. Some of the stuff, like I said, the dividend payout ratio of over 75%, not a concern with that. I even write it here. It does not apply to REITs, BDCs, etc. Companies like that just typically pay higher. But there are some other things that I don't like. The free cash flow up and down, it seems like it's had last few years it's been on a decline. I want to see what's going on there. So I'll probably do more of a deep dive onto this one. Let me know what you think of Omega Healthcare Investors in the comment section down below. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think of the video. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And hit that subscribe button if you haven't. I know a lot of you out there are watching the channel. Seems like you enjoy the channel. You keep coming back. But a lot of you are not subscribed. Hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. Hit that subscribe button. It doesn't cost you a thing but a second or two of your time, and it really does help me out. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. I hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable with. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.